All right, we're getting everybody in the room. And thanks for bearing with us as we did the set change. We had to get these guys in airline seats because that's what they're used to sitting in. So anyway. All right, hey, I'm Mike Abbott. I'm a partner at Fager Baker Daniels, and it's my pleasure to introduce the moderator for the next panel, Jason Gross. Jason Gross leads strategy and innovation at EMC Insurance Companies here in Des Moines, and he and his team have been really busy over the last couple of years. They have over 250 insurtech companies in their pipeline. They've helped complete over 40 proof of concepts and pilots the last few years, and they are negotiating over 20 commercial agreements with insurtechs and completing over a dozen strategic innovation investments thus far. Jason's on the planning committee for the GIS and on the board of the Global Insurance Symposium. And one of his claims of fame, in addition to being the best dressed person in the room, which you always are, is that he has not printed a single document for work since June of 2013, which was 6 years ago. Yeah. So, as a lawyer, I have no idea how you did that, but I'm looking forward to hearing your secret.
That'll be a subject for another session.
Awesome. All right, take it away, Jason.
Thank you, Mike. And hey, welcome everyone. It's great to see you here. We couldn't be more excited to talk about innovation and insurtech with all of you. And Mike, thank you for your support. I actually got a chance to meet Mike at the GIS last year, and we've stayed connected over this last year. And how amazing is that for us to have this opportunity to come together as an industry from so many different angles across our industry together and at the same time. I also couldn't be more thrilled to be on this stage with the two gentlemen to my right. Adam Claypool and Ted Hughes. I've had the chance to get to know both of you over the last few days, and Ted, with your involvement also with the Global Insurance Accelerator. If you can, maybe just take a minute or two and give our audience a little bit back about yourself and your organization.
Sure. So thank you. It's great to be here. Exciting topic and a fun time to be talking about it. So started Bridgepoint 7 years ago, but have been doing investment banking for 20 years, private equity for 10. And we are now launching our third strategy, which is focused on modernizing independent distribution. So lots of, particularly within life and annuity, that's our main focus. So exciting times, and excited to sort of talk about some of our experiences and what we've done to sort of approach innovation.
Great. Thanks, Adam. Ted?
Yeah, so I'm Ted Hughes. I'm the Chief Information Technology Officer for American Equity. If you're from Des Moines and you go out west and you see the R2D2 building, that's what we usually classify or give everybody a geography of where we're at. American Equity is a 25, almost 24-year-old company that ultimately started up as a startup and is now firmly in the fixed indexed annuity space. So we're kind of a unique carrier, if you will, by the idea that we are a monoline carrier in today's world. That's not pretty much unheard of. And we believe that in retirement, we believe that there's a safety in retirement, and I've got the benefit of actually leading the technology aspect of where we're going for innovation within that space.
Thanks, Ted. And for those not familiar with EMC Insurance Companies, we're a 108-year-old property casualty company based here in Des Moines, about $1.8 billion in premium, focused on commercial lines, but also with life insurance, reinsurance bonds. And we go to market through independent agents in 41 states. And I think what's common amongst all three of our organizations, and probably so many of you, is we're all on this journey together called innovation and trying to discover what path is available to us and our partners with the umbrella of InsurTech. And I want to say I did make sure to check Adam and Ted when we came up here, since we were going to be in airplane seats. I want to make sure they didn't bring any airplane liquor bottles up here, because there has been some joking about saying every time someone mentions the word innovation, we should be taking a drink. And we were afraid if we did that, we wouldn't be able to stand after the end of this. But let's get started. We really have kind of like 3 or 4 topics we wanted to talk through today. And Adam, Ted, the first topic let's talk about is, I'm going to call it buzzwords and shiny objects. Because let's face it, there are a lot of shiny objects out there in the insurtech space, whether it's insurtech, fintech. Technology is coming and it's changing, whether it's robotic process automation, artificial intelligence, blockchain, AI, AV, AR, VR, IoT, ABC, XYZ. Right. There's a lot. What are the priorities for you? What are the things that are most exciting and interesting to you and to your organization? And Adam, maybe kick us off.
Yeah, sure. So From our viewpoint, so our thesis is really around distribution and helping agents and embracing agents, and then as a sort of a co-primary role is how do you engage consumers in a different way. So from our viewpoint, we're not focused on operational initiatives. We're not looking at process efficiencies as much. Not to say those aren't important, but we just, we're focused on the relationship engagement with agents and consumers. So we look at the world through that lens, and that lens then colors the things that we think are interesting. Life and annuity products are sold, not bought, as everybody knows, and so the agent is critical in that. So the things that are of interest to us are going to be tools for agents to help engage customers better. If you look at, there's more agents retiring than new agents coming into the industry. There are fewer agents today than there were 5 years ago, let alone 10 years ago. Recruitment is an issue. How do you enable new agents who have grown up on as a tech-savvy consumer? How do you give them the tools that they need to be interested to come into the industry? And those really, for the most part, aren't that prevalent. So those are the things that interest us the most from the agent side. From the consumer side of engagement, we're looking for tools that help agents, just tools that help meet consumers where they are. My parents, they want to sit across the table, have a cup of coffee, and get their financial advice that way. My kids probably never want to see a human being the rest of their life and do everything through their device. Regardless of what I think about that as a dad, that's how they do it. Video, they're comfortable in those sorts of realms, so we have to be in those realms. We have to be in the places where they are. I'm probably somewhere in between both of these, groups. And so there's no right answer. They're all valid. They're all important. 5% of policies are owned by those that are 45 years of age and younger. So we have to find a way to give agents the tools to get to that demographic. We have to reach consumers where they are and do more than just sell them a product. So the things that interest us, sorry, long answer here. Agent engagement tools, consumer engagement tools, and more than just direct to consumer, more than just how do we sell more product.
Ted, to that example, talking about your kids, I'll share a quick story.
Yeah.
The fact that we still call these things phones,
right.
I think sometimes is an oxymoron. I have 2 teenage daughters, and my daughter has my hand-me-down phone, and she had it for about a year and a half, and I had the opportunity to be on her phone the other day. I said, hey, let me check something in your settings. She had that phone for 15 months as a 14-year-old. How much time do you think she actually spent talking on the phone? Oh, yeah. And especially compared to my sister when she was 14.
You don't want to know those stats.
Yeah. 15 months, 23 minutes is all, cumulative. And the fact is that was probably like 200 phone calls, right? Because all the phone calls are, what, Dad? Yes, no, goodbye. Text me.
Text me.
The fact that we still call these phones, they have become so much more than that, and they've really changed how we do business, how our agents and our consumers do business as well. Ted, at American Equity, how are you cutting through that noise, or maybe even prioritizing all the shiny objects? Which ones are you kind of focused on first?
That's a good question. So, I concur what Adam is saying, and that is definitely a major focus for American Equity and most of my our peers in the industry. But taking a different stance on it, playing off the last session, I am excited about the fact that now, for probably the first time in our industry, from an insurance perspective, we're actually looking at data as a trusted source, and we're using that data. In the past, we were always still focused on data warehousing, data portals, building up all this, the analytics, et cetera. What I'm really excited about is the barriers that data is breaking down between people that talk technology speak and people that talk business speak. And I'll give you an example of an example where 5 years ago I was a year into American Equity, and Jason and I were talking about this, that we were working on a specific project going back to a consumer-based product that we wanted to produce that would give us a little bit more view of the customer, the agent, and the whole policies. Today, our discussions are advancing because now data is a key player in everything we talk about. And so we're using data now to get our people out of the day-to-day, use or execution of transactions. And we're moving that data into actually making those decisions and getting our people into the complex worlds, the exception-based world. And I think that's what's exciting from a business processing perspective, is really starting to get our people in that advanced area. The business people want to focus on complex things. They don't want to focus on the mundane things. So let the data take care of that. If you got great data coming in, especially when you start talking about transaction data, which most of us do because they're coming off of our applications, they're coming off of our suitability forms or underwriting forms, they're coming off of our service forms. They're good data if we can get them massaged right. Let them power the transactions and let the people do what they really want to do, which is to work on the exceptions and the hard cases.
Ted, I so much appreciate that. And remember back to our conversation before we came up on stage, even about prioritizing. How do you pick? And it's tough for some of us in maybe technology disciplines or in innovation disciplines, because we're so tempted to go off and build all these cool new tools and then go turn out to our business partner and say, here, look what I built for you. Isn't it awesome? You're welcome.
Right.
And so often the response from our business partners can be, well, I didn't ask for that, or from our agents or policyholders. So I know from our own experience at EMC, it's been absolutely critical for us to work with our business partners, and shout out to my business partners in the audience, to make sure that we understand what are our priorities, because we can't do all of the things at once. And even with so many of the insurtech companies that, and many of you are in the room, sometimes these conversations can go on for a year or two, not because we don't want to pursue that solution, it's just because we're not ready. We have other priorities in the hopper. So the second topic for today is, and this is maybe an oversimplification when we talk about innovation, but at the corporate level, we really kind of see there's like 3 different avenues for innovation. One is internal, and unfortunately, Teresa Scharn from Principal Financial Group couldn't be with us this morning, so I may talk a little bit about what we're doing at EMC as far as internal innovation. There's external innovation, so partnership with insurtech companies, fintech companies, and the like. So Ted, I'm going to ask you about your experience there. And then the third is actually putting your money where your mouth is and investing into startup companies or other companies that are trying to change the way we do things. And so Adam, I think we'll ask you about that. But Ted, maybe let's start with you. I love that you also have your Global Insurance Accelerator lapel pin on, so shout out to them. I know you joined us recently on the GIA. How are you thinking about insurtechs and even deciding which ones to partner with? How do you partner with them? What's that process look like for you?
That's a great question. And let me start back. 25 years ago when I started my career in IT, I was talking to somebody I started with at Principal Financial Group back 25 years ago last night, matter of fact, and we were talking about how there was a saying that said, look, you can't lose your job in IT if you pick IBM. If you ever remember that, right? And it was always that safety decision when you start talking about technology within our industry, and you want to take that safe choice. And I think the reason was that, now that I look back, was not because we didn't want to go with maybe a company some of you might have remembered as Micro Focus, or some company sitting in California building something. It wasn't that we didn't want to do that. It was because at that time, we were attacking problems at such a holistic level. We were looking at policy systems versus just an underwriting component. We were looking at the full claim system versus maybe just the first notice of loss process. And so what I'm excited about from an external perspective is that, at the GIA, it's really exciting to talk to these companies and actually refreshing to hear them talk business language and technology solutions, but not talking at it at an oversold, large, trying to solve the world, but really laser focused on a specific niche. And so from a technology where I sit at the table, what I'm looking at from insurtechs, innovation, using those type of companies is, what specific little niche can I use their expertise in, both business and technology, and how do I plug it into our overall strategy? Not solving the world, but a very quick incremental value that we can get out of them and utilize them and then move forward. And so I think that's what's exciting about insurtech right now today. The quote that the guy from Limerick said, $2.32 billion over 331 deals. Did anyone in the room do that math? Because I did. I mean, that's astounding.
That's crazy.
Okay, that's crazy. But even more crazy is, I probably have now, between GIA and going out to California, I probably talked to, in the last year, somewhere around 170 startups. Yep. And I'm thinking, how did they get that kind of number? Well, it's because, especially when they're all niche players, they're all trying to solve just one small minor part of our whole process, which is exciting. And how do you plug that in? So I think that's the exciting part. It's also exciting from an IT perspective because my organization is now refreshed. They're not worried about going and losing their job because they just bought a policy system and they can't get it up and running. You know, they can't get the data in there, they can't get the whatever. They're now worried about, how do I take something and make it even better first for an incremental value, but then how do we use it in farther reaches in the company? And so that's what we talk about a lot.
So Adam, Ted hit the nail on the head, talking about the number of investments and the amount of capital that has been brought into our industry from some very new players. I was going back through your bio, and I'm just really impressed. So over 40 deals over the last 7 years, raising $450 million in capital. And there's just no way you take all the advancements in technology and changing consumer preferences and you throw in all this capital with it as well, things are going to change. Yep. But so for our audience members that are either haven't ever considered investing in such a company or doing those type of strategic investments, where do they start? What does that process look like? What should they be thinking about as they're even considering, should we also be putting some skin in the game from an investment standpoint?
Well, the first thing that we talk, and so I don't work for a carrier. We work with carriers, we work with their independent distribution. So our view is sort of outside the lines, maybe a little outside the box, so we have the freedom to be able to think a little differently. And so at the fundamental level, innovation, and I'll get to your question here, which is really good, is we look at innovation as sort of a portfolio approach. There's lots of things you can do internally. There's lots of things you can do externally. You can have somebody, the most successful organizations have somebody that has a title involving innovation, whether it's digital strategy, transformation, actually innovation, some strategy, but these aren't co-roles. These are dedicated roles. So again, from an internal perspective, we see that. We see participation in the accelerator or other organizations like that. We see, corporate venture funds being stood up. We see them making external investments in venture funds or external investments into insurtechs. All of that is fantastic. We see dedicated processes, teams that are set up to look at new technology. Given the volume of incoming ideas, there's got to be a process for evaluating them. And sometimes you've got to take it outside of the organization. Sometimes success is best achieved through a partnership, through a joint venture, through external investment. And so we think that those that are going to be most successful will sort of look at it as an asset management approach. So you're trying to, allocate between domestic and foreign, income and growth, long duration, short duration, uncorrelated assets or non-correlated or low correlated assets. And these cut across internal or external initiatives that firms can take. So ultimately, we think that managing around innovation, managing around change, and achieve the carriers that sort of do that in a portfolio approach will be the ones that are most successful. How do you cut through?
Yeah, where do you start?
You start with people, not tools. You start with people, not products. So there's lots of insurtechs, lots of investment, lots of shiny new objects. Going back to our first question, set it all aside. Focus on what your organization needs. So I'll give you an example of how we've done it. I don't know if it may be informative for you, but we've spent 2 years sort of researching what the market needs. We've talked to agents, we've talked to IMOs and the business owners. We've talked to carriers, folks in different functional areas, folks that work on distribution and folks that are working in technology. And over that time period have learned what their individual pain points are. We're seeing struggles with e-app adoptions and so forth, where there's 5, 10, 15% adoption. And it makes an abundance of sense. Why wouldn't those be readily adopted? But they're not. If you're a carrier and you sell through independent channels, you can't mandate downstream. So we've listened to folks, and then we've also taken a look at what has been successful or not successful in other industries to try to use that as a proxy for what we may be able to do. And big box retail is a really easy spot to look. Over 15 to 17, there are about 60 bankruptcies in big box retail, some of them twice, like Radio Shack. And so we looked at what was successful for those that have sort of made it through, and that what didn't go well for those that didn't. And it's really interesting, and maybe I'll just sort of quick poll here. What would you guess are the top 5 most popular online retailers today? Maybe just somebody shout out one of them.
Amazon?
No. 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 So,
Domino's?
Macy's is number 1, and they've closed almost 200 stores in the last 4 years. Number 2, JCPenney's. JCPenney's. Now, this is based on traffic, not dollar volume. So probably Amazon's number 1 in dollar volume, to be fair. Nike, Gap, and Nordstrom. These are not incumbent, these are all incumbent names that have figured out how to transform their business and react to changing consumer preferences. There's lots of examples of those that didn't win. But these are a really good analogy to be drawn for the insurance industry is you take a very large, mature business and an industry, and how do you evolve that and change that quickly?
Well, and Adam, I think that's exactly the point that I know in talking to Teresa, here again, she couldn't be with us, but some of the things we talked about as far as internal innovation, it really starts in so many ways about internal culture and being open to change and open to transformation. And so just a couple examples of some things that have really helped EMC on our journey in terms of internal innovation. One is we've created a cross-enterprise innovation team. So while we do have people dedicated to innovation, but let's face it, there's 2-3 people on that team, and their job is to really focus on the sourcing and facilitating and chaperoning those early POCs or pilots. It's the partnership and collaboration with our business partners. So we have representative from our branches, our field, from underwriting, from claims, from customer experience and business process and IT, and bringing all those people together to talk about those shiny objects, to help prioritize those shiny objects, and even to share and learn from each other, because we have to go on the journey together. You know, another thing along those lines that we've had some success doing is opening up our innovation efforts to everyone in the company, so that it's not just even that those 3 or 4 people or even that team. Through monthly sessions and some pop-up labs and things like that, we've been able to bring people from across the company together and really help build that energy and enthusiasm so that everyone can come along with it. And one of my favorite stories, and I'll put another plug in for the Global Insurance Accelerator. We had the GIA companies, and of course you will all see them this afternoon give their pitches in front of the GIS. And that's a big deal for these founders to stand up in front of several hundred of you industry experts and pitch their company. So what a lot of us member companies do is we invite them in to practice, to kind of get the nerves out and to practice their pitches. And we did that at EMC last year, and we had those companies come in, and I thought I was just doing a nice thing by inviting them in and giving that platform, and we filled up our auditorium, and it was a really nice opportunity for them and for our team members to hear from those companies. I had so many team members come up to me afterwards and say, Jason, I have never felt so inspired. I have not felt so engaged about our company and our industry in a long time. I was getting goosebumps. How many people said, that was awesome. And I'm like, well, how do we get more of that? Right. Let's do some more of it. So thank you both. Topic 3. Let's get really kind of into the details about how can our folks in our audience adopt this or be thinking about it, because I think the title of our session is even called The Magic of Transforming Innovation into a Successful Product. Because I know a lot of companies and a lot of organizations, it's easy enough to talk to insurtech companies, maybe do a proof of concept or a pilot, but there's still that magic of going from pilot and getting things into production. So what are some of the keys to effective organization, or effective innovation in the organization, to take things from those ideas or those concepts and actually get them into production for our agents, our policyholders, et cetera? So Ted, I'm going to start back with you.
Yeah, sure. First of all, I learned a long time ago, I used to run a software company, and so we were in the sell mode all the time. And then when I moved over back to the carrier, broker dealer, then to a carrier, one of the things I learned very quickly is the executives and the boards don't want to be sold anymore. They want to buy something. And so now you start to talk about insurtechs and start to look at innovation and start to figure out how do you build that buy relationship and remove the sell relationship. Because in the past, I'm sure a lot of you raise your hands, your department has a great idea, then you go try to sell that idea to another executive and then try to get that other executive to sell it up to another ladder. Then ultimately it becomes, especially in innovation and technology, it becomes a technology issue. So then the CIO has to get involved and try to sell it to the board or to whoever. And that is a very hard process to really get to be successful, because everybody has an opinion on the process. So at American Equity, what we're trying to do is make innovation a culture. It's not an IT issue anymore. And that's what's exciting. The collaboration between the business and my organizations is actually, you can't even see the gap anymore. We have Scrum teams tied to business processes as opposed to technology. We have Scrum teams tied to business units, focusing on those business processes. 10 years ago, every organization in Des Moines, if not the world, was all tied. You had your COBOL people, your Java people, your web people, and it was a fight to get to it. So how we're working on things is from a standpoint of innovation is driven from the business and the IT both. I will tell the executives I work with, I'm not going to be apologetic for bringing up innovation ideas to the table anymore. I'm past that. Because everybody would say, well, technology is driving business then. I feel like I have just as much business need to sit at the table and say, here's an innovation that I think we could leverage in this specific area, and then get the business unit to come and say, no, maybe we could do it this way. That's the partnership that we're trying to build, and that's what's exciting to me. And so, when the other piece of the puzzle is, and you guys have all seen the TED Talks around motivation, and I'm a big believer in it. Once you find somebody that does it for the love of it, and actually then ultimately does it on a high standard, let them go. We have built 4 or 5 really, really cool things in a build mode at American Equity because we took some people that had passion about it and just let them go. And they failed 4 or 5 times, but they failed fast. We were able to recover and move it to where we really needed to be, and they're all in production now. And that was just things that we just let them go. And that's the part of passion I love about innovation is it could be somebody in our new business department that ultimately knows there's a business problem, but they have a passion for it. We let them go, and we give them technologists to help them motivate them to get farther down the road with it. So that's how I see it.
Awesome. Thanks, Ted. Adam, what tips do you have for our audience on adopting innovation?
So I know we're running out of time here, but discovery, it all starts with discovery. You have to, again, and this is sort of a variation on what I said earlier, it's people, not product. You have to start with who are you serving? What are the challenges that you're trying to solve? You can't go, it's like walking into a grocery store on an empty stomach without a list. Right? You walk in there and I'm like, well, I want that and I want that and that sounds awesome. I'll have 5 of those. But if you walk into a grocery store with a list, you know what you want, you have purpose. You're buying because you know what you're looking for and why you're looking for it. So the analogy there is that you have to do the work up front to know what you're looking for and why you're looking for it. Outside of that, so discovery comes first, you need commitment. So defined roles, defined capital. When from investment banking days, we'll walk in and somebody will say, well, we're going to allocate this much money. Okay, good. Is that committed capital? Well, if we see something that we like, yes. Well, now you're just shopping. You're not actually committed. Are you here to solve a problem or not? Yeah. So start small if you need to, but you have to actually make commitments and put the people in dedicated roles, put the processes in place. Innovation, as Ted said, it's not a project, it's a culture. Yeah. So there may be a starting point, but it's an evolution over time, and you're going to keep pivoting and learning, and you should ask yourself questions, is this working? Ask your customers again, is this working? Strive to solve their needs. Don't just ask the question up front, revisit that 6 months. Market surveys, customer studies, customer advisory boards. Ask those questions all the time, continue to learn, and then refine and sharpen. So discovery, commitment, and then you have to align incentives. There has to be compensation. So one of the big questions that you may get, and I'm interested to hear what you guys have to say, is how do you compensate, or what are the metrics around compensation, or just the tracking and accountability metrics? From this guy's chair, I'd say you track activity and reward activity. So if Ted's profiling 170 insurtechs, or 180, I forget the exact number, versus 5, what do you think is going to wind up with better results? Even though that may not wind up in one investment, those are the activity metrics that you need. So we would say, know what you're looking for and why. Commit the capital, commit the people, commit the time. Communicate that broadly throughout the organization, and be realistic about what the metrics are. You're not going to hit a home run. Venture firms don't hit a home run. You won't either. You'll fail. Things don't always go up and to the right, but learn from it. And if the activity metrics are there, you'll find success.
You know, Adam, I couldn't agree more. And you know, I think Mike even mentioned it, you know, in my introduction. You know, if you make one investment, that means you have probably gotten to a commercial agreement. Yep. You know, for us, we're investing in companies that we are doing business with. But that also means to get to that one, you've probably piloted 4 or 5.
Right.
To get to those 4 or 5 pilots, you've probably had, you know, multiple conversations with 15 to 20 companies. Right. To get to those 15 to 20 companies, you may have even signed non-disclosure agreements, you know, so have that second level conversation with 30 to 40, which means you're probably looking at 100 to even get to that 30 to 40, to get to that 15, to get to that 10, to get to that 5, to get to that 1. And you kind of even tackled my last question, but I'm going to give Ted an opportunity to answer it as well. But also say, I do think we'll have time for 1 or 2 questions from the audience. So if you have some questions, be getting ready, and I think we'll have some microphones to share as well. But the last question was really around, how do you measure success? Mm-hmm. You know, Ted, you and I were talking, I think, about while I do think there is value in innovation for innovation's sake, because it can create thought leadership, you know, those new ideas from research and development. But at the end of the day, you can only afford to do so much innovation for innovation's sake. You have to be able to show some results, top line, bottom line, et cetera. Ted, how are you measuring the success of your innovation efforts?
Yeah, that's a good question. So, you know, you start with the fact that, you know, the culture in innovation, and that's business process innovation, technology innovation, any type of innovation, is incremental value. And so then the days of asking for a cost-benefit analysis, a return on investment, that's very difficult now when you're really asking them to do is to give us small change that has big value as quickly as possible. That's kind of the culture we're in right now. Sure. And so, you know, for us, we're looking at it from a standpoint of incremental value and trying to change the culture shift of really trying to look at how are you effectively making that change, and ultimately is that going down a road path that you know that where you're trying to head for. I'll give a really simple example. You know, in IT, you have bugs with systems, right? All the time. You have problems with systems. They're always there. Right now, I'm in a big culture shift with my team, because what I'm trying to sell to them and trying to get them to actually understand, or at least try to buy into, is even a severity 1 issue in a bug is an innovation opportunity for our corporation. It is not just go fix it, go give that business person an analytical report. Step back, be a thought leader, think about how you're taking that specific change. And by the way, it's not a bad thing you're working on a Sev 1 and you're not working on a really cool website. You know, you can make it cool. How about putting a analytical tool on the front of that they can look at the data all the time, and ultimately they can assess if there's an issue coming down the path versus the severity one hits us in the face. So from where I sit at the table and where I'm trying to get my peers at our corporation to look at is, let's don't think about, is it a cost-benefit analysis to do this? Is it an ROI to do this? We're looking at it as, is it taking our culture and our processes in a path where we know where it's heading, and ultimately can we get value out of it long term?
Great. Thanks, Ted. I think we have just a couple minutes. If anyone has a question in the audience, I see a few hands. Well, let's get started. Whoever gets the microphone first. How about down here?
Hi. I had asked a similar question to the last group of panelists, but I think you might be more suited for this. So I work for the venture group Mass Mutual, and I'm curious kind of some of the startups that you've seen that have piqued your interest, you know, top 3, top 5, whether it relates to insurtech, fintech, cybersecurity. And then second, as you sort of identify some of these startups, do you look top down and identify certain pockets of opportunity and then find the startups that are leading in those groups? Or do you kind of go bottom up in meeting with different startups and then understanding the broader dynamics from there?
Great questions. Yeah. I'm going to let you take that one first.
Okay. I'm going to start with the second part of the question, because I think that's actually probably the more valuable, is that, again, you have to know what you're looking for before you go into the grocery store. So once you go into the grocery store, you know why you're there and what you're looking for. So we think at the point that you know what your shopping list is, and then we break it down into sort of, is this engagement related? Is it data analytics related? Is it agent focused or consumer focused? Or, you know, so we've tried to segment from our side is into categories, and then profile all of them and just do a top-down approach. Does this hit our criteria? So again, we're comparing the universe within different subsegments against what we know we're looking for and why we're looking for it.
I'll say at EMC, it's also top-down, bottom-up. As Ted mentioned, you know, the 150 companies, or Mike mentioned the 250 companies on our pipeline. It's keeping track of the solutions in search of problems. Mm-hmm. So those are all the insurtechs that we meet, and anyone that we find of interest, we put them on our pipeline, we put them on our radar screen, and we track them. Even if we don't, you know, have a follow-up conversation with them for 6 months or 12 months, we understand that insurtechs change and they pivot and they grow, and what you see today might be very different from what you can see in 6 to 12 months. But then we also, the other half of the pipeline is the problems in search of solutions. So that is the prioritized list of, here are the business problems we're trying to solve. So then my innovation team can play matchmaker. Hey, insurtech, your solution looks like your problem over here. We're going to put the two of you together and see if there is some magic that can happen. But we're not just going to send you off on your, you know, first date alone. So we're going to chaperone you. We're going to, you know, be there for you, business partner insurtech on those first couple dates, help facilitate the POC. We even have a separate budget just for POCs and pilots, so that our business partners, you know, don't have to say, well, I'm not so sure I want to do this pilot because I didn't budget the $25,000 for it. You know, we have a centralized budget to help our business partners, so that we take away as many obstacles and roadblocks as possible to see if those connections can make it happen.
So I'll hit your first question, because I think that's really interesting right now. The question was, what are the ones that I'm seeing right now that I really get excited about? And I'll go back to my first comment, which is data. So you're going to hear a couple out of the GIA today, and they're all of them are really kind of wrapped, all 10 of them wrapped around some data type processing. The real exciting part of InsurTech right now is that they're not just throwing you a new technology and saying, hey, where can it fit in your company? Almost all of our GIAs this time, our cohort, every one of them are attacking a specific insurance business segment, which is exciting. Because not only do they have great technology, but they also have good business skills. They have business knowledge. So one of them is attacking specifically the retirement space, which is great because that's where I live in. But it's really exciting because it's breaking down a barrier that ultimately has been there for years and years and years. And that is, as somebody de-accelerates money out of the pension programs and the 401k programs, how do they get them into to insurance products like annuities that would give them safe money and get them retirement sleep insurance, which is what we call it. And so they're trying to break down that barrier. That's pretty exciting stuff because, nobody wants to keep paying DTCC a lot of money to transfer data back and forth all day long when maybe you can put a technology in place to have a relationship between the pension companies and the carriers that provide the ultimate sleep insurance.
So guys, I'm getting the 3-minute warning. I think we got started a minute or two late, so if we go a minute or too long, I don't think we'll be in too much trouble. But I saw a couple other hands. And can I ask, will both of you be around afterwards if people have additional questions to come up and ask us directly as well? Thank you both. So I know there are a couple hands here in the middle. Oh, there's a mic.
So one of the things that's probably most valuable in an organization is people's time.
Yeah.
And how do you build the culture in your company for innovation, not to just save time and get rid of people, but to redistribute those people's time to do more innovation? How have you applied that in your organizations to get people to think differently from, hey, we automated this, we can get rid of this person, to we're automating this so that this person can do more valuable things?
Yeah, exactly. Do you have any?
Go ahead, because
We actually were just sharing an example. This was a proof of concept. So it was a first test, one of our early tests in RPA, robotic process automation. And it was one of our branches to automate, a few critical steps of moving some things really just from email into our system folders. But it takes a lot of time every day for someone to manually do that. So we had an incredibly successful POC. And at first, I was really curious to see if the people in our branch and our field offices would be hesitant about that or be scared about that, saying, hey, is this bot going to take over my job? But what we really found was they were very excited because they don't like doing those manual processes either. They all have more than enough work to do, and it really allowed them to free up more of their time to work on things that added more value. They were happy with it, their leadership were happy with it, and it was really a home run. Now, over the long haul, will more of our actual jobs be able to be automated? Maybe. But we also know that we're facing a lot of other challenges across our industry as well, an aging workforce, demographic changes. So I actually think that a lot of that is going to work in our bigger picture favor. Do you have any other comments?
Yeah, when you started talking, I was thinking about 4 years ago when we did a specific thing. That's exactly the culture we had, which was they were worried about us. Reduction in force, I'll say the word, we're not going to shift them to the right spots. It's a trust and respect, and that comes from the top down. That is not a bottom up issue. And so innovation, if we build a culture where we're putting innovation in either a business process or a technology process, and it does maybe allow them to go move on something else, there's a trust and respect that has to happen in your culture that allows them to know that it's okay. It's okay, let's put that in, let's suggest that, let's do that, because I know there's another spot for me. I know they'll find me another spot. I know I can find myself another spot, et cetera. And so in my prior life, when I was at the broker-dealer, we couldn't get that culture. It was a very difficult process to do that. And even though we were pretty innovative, the reality is it was like pulling teeth to get people to use it. And so, but I am at the luxury of working for a company right now. At the top down, we have a culture of trust and respect. We tell them what we're doing, why we're doing it, where we're going to go, and oh, by the way, there's opportunities in other areas because we have lots of challenges.
Great, Ted. I got the approval for one more question, and then we're going to turn everybody off to lunch. Was there? Yep, right here.
Thank you. So one of the things we struggle with as an organization at RGAX is that it's hard to leverage legacy onboarding systems for vendors into the new ecosystem of starting POCs. And one of the things that would love to hear you this panel because it sounds like you guys have successfully implemented a number of POCs, is that we will do things like try to run an experiment and find someone on Fiverr to create a mock-up and do a Facebook campaign on a new product hypothesis and measure engagement rates and things like that. But even to write like a $2,000 check to get some entrepreneur on board to run things is impossible in our vendor vetting system. So can you talk a little bit on that terms and how to ingest these new smaller groups, dynamic groups, into a legacy processing system?
I know for us, a lot has been, here again, bringing the entire organization along. And we still have, I think I saw my CIO smile at your question. because we obviously have a lot of legacy systems and processes as well, not only from the IT side, but from compliance and everything else. And it's a fine line between wanting to be more open and flexible to work with startup companies, but to still obviously uphold all of the promises and the processes that we have to do. I don't know that we have it all figured out yet. Ted, I'd welcome your thoughts too. But I think by bringing our business partners and our compliance folks, they have a seat at the table as well. So they're able to give their input and direction from the get-go, as opposed to us, hey, we've already got this 90% done. We just need you to sign off on this so we can move along. That didn't go very well, as you can imagine. Do you have anything?
Well, and I think it goes back to, not to get into a technical talk, but a component-based architecture. Those legacy systems do something very, very well for you and have done that very, very well for a lot of years. For us, our policy system is the best policy system I've ever been around, and I've been around a lot of them. As a vendor selling a policy system, as a carrier, as a broker-dealer, our cycle starts at 8 o'clock and it's done at midnight, and there are little to no problems. So why wouldn't I try to figure out how to make that a component of the overall architecture? And then you're not battling that with the legacy people trying to hold on to their territory, the new people trying to hold on to their territory, and really the incumbents, which are the companies coming in. We're working with a really exciting one right now that's handwritten language, taking handwritten language and converting it over. It's an exciting industry right now. The technology is improving fast. But quite frankly, my legacy team is the one jumping on it faster than anybody else. They're trying to figure out how we can take that data and shoving it into the policy system as fast as possible. And they're the ones leading the charge now because it's a component. They're just a component of the overall strategy.
And Ted, I'll add one more shout out here. We also couldn't do some of the things that we do and have some of the conversations that we have at the macro level without the leadership of our Iowa Insurance Division. The leadership, the thought leadership, and the collaboration they have with carriers and companies in the state, we wouldn't be able to have these conversations as well. So it starts at the macro level, it gets to the enterprise level, and all the way down to the department level as well.
Yeah, I would just say, not being inside the belly of a carrier, I'll leave the technical things, but from a cultural well, I think it's a cultural question. It comes down to, you can do the ideation and the brainstorming around what you're looking for and why, and then find the solutions. But that's not where then that stops. The rest of that sentence has to be finished. And so it's a little bit like, I'm securities licensed and we have a compliance, we have a broker-dealer, and you either sort of make that part of your business process, or you can fight it. Mm-hmm. And if you're going to fight that aspect, then you're not going to be successful. You're always going to sort of be at odds. So culturally, you have to also incent those outcomes and that level of execution to actually be able to get it done.
Great. Everyone, thank you very much for your time and attention today. Lunch is going to be served upstairs. Adam, Ted, thank you very much.
Thank you.
Adam.